Imagine developing a reliable income where you earn a substantial stream of money even while you sleep. This is the power of dividend investing. Welcome to Cash Flow Canvas, where we teach lessons about investment and money-saving techniques. If you want to make your financial future better, make sure to like this video and subscribe to our channel for the latest updates. In this video, we'll explore the many benefits of dividend investing strategies to maximize returns and how a dividend investing strategy can help you. The method can pave the road to financial independence by generating continuous passive income. Stay tuned to the end to learn exactly how you can generate a big and consistent income stream solely from dividends. Dividend investing is the concept of investing in firms that pay out a portion of their income to shareholders as dividends. Dividends are typically paid out on a quarterly basis and provide investors with a consistent income stream. The beauty of dividend investing is that it allows investors to benefit from both price appreciation and regular cash flow, whereas growth stocks may offer the potential for higher capital gains. Dividend investing is concerned with the regularity and stability of income. To increase your chances of success, you must first understand why corporations pay dividends in the first place. By distributing dividends, corporations can attract and keep investors who expect regular income from their investments. Dividends can also be used to reward shareholders for their investment and give them a piece of the company's profits. Considered to be a measure of a company's financial health and stability, paying dividends can also contribute to a positive perception of the company in the market, attracting more investors and potentially increasing the stock's value. It is important to note that well-established companies with stable cash flows see dividends as an effective way to spend their income if the company has a positive perception of dividends, does not have significant growth opportunities, or prefers not to reinvest all profits back into the business. In other words, companies commonly pay dividends if they believe it is not worth reinvesting the money back into their business. The slower-growing companies are typically the ones paying dividends the most. While the stock market can be turbulent and unpredictable, dividend payments provide a continuous source of income that is less influenced by market swings. This can be particularly enticing for retirees or persons looking to augment their regular income. The continuous income flow from dividends provides financial security and comfort of mind. Payments can be used as a source of revenue instead of selling shares to cover bills and other expenditures. By reinvesting dividends back into the company or using them to purchase further shares, dividend investing has the potential for exponential growth due to the power of compounding. The compounding effect can help investors accelerate the growth of their portfolios over time. Be absolutely extraordinary by transforming a little investment into a sizable nest egg. Dividend reinvestment permits investors to acquire additional shares, which leads to higher dividend payments in the future. Maintaining a growth cycle. Dividends, unlike fixed income, have the ability to outperform inflation. Investments that may struggle to keep pace with dividend payments are frequently increased in response to rising prices. As companies raise their payouts in line with their earnings growth, investors can maintain their purchasing power and potentially enjoy a higher standard of living. Dividend growth stocks, in particular, tend to increase their dividends at a rate that exceeds inflation, providing a natural hedge against inflation. Rising-priced dividend investment offers diversification across multiple asset classes. Dividend-paying stocks can be found in a variety of sectors and industries. By investing in a mix of dividend-paying stocks, investors can spread their risk and mitigate the impact of poor performance in any single company. This diversification helps safeguard against potential losses and provides a more stable income stream. Dividend investing aligns with a long-term wealth development strategy by investing in financially stable companies that pay dividends on a consistent basis. Investors can participate in the growth of successful enterprises and benefit from capital appreciation over time, which can lead to significant wealth accumulation. By investing in firms that consistently raise their dividends over time, investors can benefit from both a regular income stream and the possibility of stock price appreciation. To recognize the dual advantage permits investors to accumulate wealth through a combination of income and capital gains. Dividend investing has the potential to have a major psychological influence on investors. Companies that consistently pay dividends can provide a sense of security and reassurance, especially during times of market instability. The monthly income delivered by dividends might provide a sense of security, financial security, and increased investor confidence in their investment. Long-term attitude encourages investors to focus on long-term portfolio growth, rather than short-term market fluctuations to make the most of dividend investing. There are a few factors to consider that will have a significant impact on overall levels of success. Investigate and select high-quality dividend stocks. Thorough research is essential in choosing organizations with a proven track record of success. Dividend payments that are consistent. Look for companies with solid financials, a history of increasing dividends, and a competitive advantage in their industry. Fundamental analysis, which includes assessing a company's dividend yield payout ratio and cash flow, can help identify the most promising dividend stocks. Concentrate on dividend growth. Dividend growth stocks are corporations that pay out dividends. Over time, they have continuously increased their payouts. Investing in these companies provides you with both a present income stream and the opportunity for future income development. Look for companies that have a history of increasing their dividends on a yearly basis, demonstrating their commitment to returning wealth to shareholders. Aristocrats are firms that have raised their dividends for at least 25 years. Dividend investors frequently choose successive years. Reinvesting dividends, dividend reinvestment, can considerably enhance your long-term gains. Many brokerage platforms include dividend reinvestment programs or DRIPs, which automatically reinvest your dividends back into the company, allowing you to buy more shares. This method compounded your investment over time, resulting in a snowball effect of increasing dividends and money. Dividend reinvestment allows you to capitalize on the power of compounding and maximize the potential for wealth creation. Consider dividend ETFs and index funds for investors seeking diversification and a hands-off approach, making them an appealing option for people who prefer a more passive investment strategy. Be cautious of extremely high yields. When a stock appears to be in a dividend yield trap, it is to provide a good dividend yield, but is accompanied by underlying risks that could compromise the dividend's sustainability. High dividend yields may excite investors, but if a company's dividend yield is particularly high in comparison to its peers or the general market, it could be a warning indicator of underlying difficulties. These problems could include poor financial performance. Falling into a dividend yield trap can be psychologically tough because investors may become unduly focused on the allure of large payouts without considering the potential risk. The strength of dividend investing is its potential to create passive income without ever having to sell. Investing in dividend-paying stocks, stock owners might benefit from continuous cash flow. Take advantage of the compounding effect, hedge against inflation, diversify their holdings, and move toward financial independence. But rigorous study is required. Before jumping into dividend investing, research the fundamentals of particular firms and seek professional assistance. Let your money work for you and harness the power of dividend investment. With patience, diligence, and a long-term perspective, you can unleash the potential of dividend investing and establish a more secure and prosperous financial future.